My name is Gorman, and in this episode of Semilla.VC, I sat down with Ryan Blumberg, founder and managing partner of K50 Ventures. Prior to founding K50 Ventures, Ryan was a founding partner at Kairos and a senior associate at Blumberg Capital. In this episode, we discussed how LPs should think about sociopolitical risk in Latin America, why Ryan thinks the LatAm Exit and IPO market will be cool for the next 12 to 18 months, but roar back in 2023 and 2024. We discussed the culture of venture capital in San Francisco versus New York versus Miami, and why he founded K50 in New York City. And finally, we discussed how Latin America today compares with China in 2013. We talked about all this and more in this episode of Semilla.VC. Okay, Ryan, could you start by telling the audience a bit more about your work history up to and including your current role as managing director of K50 Ventures?
Yeah, of course. And thanks so much for having me on. This is fun. I actually got to know K50 and Kairos when it first started. I was starting my first company and really have been involved ever since. And K50 and Kairos have a long history of dating all the way back to 2008. So, and I'll get into that a bit. But my background is entrepreneur turned VC. Actually got my start with David Blumberg at Blumberg Capital, who started a early stage venture fund. Their thing was leading the seed back when I think leading the seed was only done by really like micro VCs and angels. And based in San Francisco, they had a global approach to investing, which is really where I think first found first fund that I worked with, and was exciting to see that Silicon Valley investors can invest outside of their backyard and be investing in companies all over the world. Then I joined a portfolio company as the first hire, which went on to IPO. So I had a pretty successful exit there, and then went back to venture capital and started the K50 and Kairos platforms from a venture perspective. To give you to give the group a bit more background on Kairos and K50. Kairos started in 2008 as a fellowship for mission-driven entrepreneurs. And so there was chapters that were created on college campuses in the US and then began to expand outside of the US and outside of college campuses to really almost like 40 plus countries. And basically we believe that huge social problems were going to be solved through entrepreneurship rather than government. And that said, Kairos' mission was to support and inspire the next generation of leaders at a time really when startups and VC were not as hot as they are today. This is, back in 2008 when I think Y Combinator was just starting. There was maybe 3 accelerators that existed. I forget, I don't know what the stat is today, but it's got to be in the hundreds and probably in the thousands in terms of like early stage funds that are popping up, including syndicates. So the space has definitely expanded. The community grew globally to thousands of fellows. And in 2016, we actually raised our first fund. The K50 was always a program that existed within the community, really to highlight and spotlight the 50 founders that actually went on to go start companies and maybe raise a little bit of money, and we would take them through much more of like a venture process. So it was only fitting that we called it K50 Ventures. And we started the fund to support the entrepreneurs with network and guidance, but also capital, which was one thing that a lot of our founders were looking for, especially mission-driven founders, especially young founders. It was hard to get the attention of VCs. And in 2019, we ended up growing the team. We're now 7 full-time around the globe. We ended up really pushing into our first international market. We'd always invested in Latin America from 2016, but we really doubled down in 2019, and I'm excited to have a partner there. And really half our team is actually, born and raised in Latin America. So I guess the only other thing I'd mention is we've really always been driven by impact and helping founders build their businesses. Um, I now live in New York City. That's where we have our office is in right in Soho. That's about it.
Could you tell us more about the genesis of why Latin America? And then you also mentioned you had a partner there. So where is the distribution of your K50 team across both North and South America?
Yeah. So 96. Okay. So 19% of our first fund was in Latin America. Investments that we did in Latin America, a couple of companies, Colombia, Brazil, Mexico. And that percentage grew as we continued to invest. Fund one, fund two, and we're now in fund three. And now we're up to really almost half of our companies are based in Latin America. The geographic distribution within Latin America is 93%. That's the number for Colombia, Brazil, and Mexico. So majority of our investments are in founders that are operating out of or HQ'd in those three countries. And we've invested and we definitely look at founders building in other countries. Typically they end up going to one of those countries anyway. So that's the geographic breakdown. And then as far as the like why we decided to double down on Latin America, it was really simple. We had, trusted relationships. We were in the region before it was hot. In 2016 was when we made our first investment, and we really built, genuine relationships with the investors there, with family offices that are, running companies or their operating businesses are the traditional companies that a lot of these startups are trying to disrupt. Who I think have been way more involved and interested in collaborating with these companies as startups started coming to the region, as more venture capital started coming into the region. And this really helped us, after you build a community of founders, you end up getting referred to a lot more great founders, and that, is almost like a flywheel. The other thing was we were basically we were seeing a lot of founders before they would go out and raise capital at the seed stage. And so we were just seeing founders earlier, like honestly better founders earlier and at great valuations. So for us, it made sense as an investment firm, but more importantly, it really fit our thesis. In 2016, it was kind of hard to find founders in the US that were building for the 99%. I think that was the, having a mission driven founder come and say they wanted to do something in financial inclusion, or wanted to build something to make healthcare more affordable and more accessible, or education for that matter. We wouldn't see so much, and now we're seeing a lot more. In Latin America, like the problem, it's ripe with problems. I believe there's, we found this out as we started investing, it's ripe with opportunity. And so when those two really match up is really like our sweet spot. And that was the majority of the reason. All the financial reasons made it make sense as a business, but that was what really brought us to the region was really the problems and opportunities. The people are amazing, culture, and then the financial piece made it all make sense from a business perspective for us.
You mentioned on another podcast in 2021 that Latin America has a growing number of exit opportunities. Roughly a year later, is this still the case? And could you elaborate on this point? And do you see IPOs taking off in Mexico like they have in Brazil anytime soon?
Yeah. So, I mean, I think we're just at a, I think we're at a standstill across the globe. Um, the I believe the IPO market will most likely be cold for the rest of 2022 and possibly for 2023 as well. Um, so I don't think we're going to see a ton of IPOs happening over the next year and a half, to be honest, unless a company absolutely has to. They'll probably stay private for as long as possible to keep on building their, move to profitability, to make their unit economics a bit stronger, to grow into their valuation. A lot of companies, not just in Latin America, but a lot of companies across the globe, and specifically in Latin America, there was a lot of money that came into the region, right? So a lot of VC money that came into, and I'm just bringing up a quote here. Yeah, I mean, if you look at in terms of millions, so there was 1.3 billion dollars that came into Latin America, VC fundraising, in 2019. So that's VCs that had raised capital in 2019 in Latin America. Okay, that's 2018 was 637 million. So same number of funds, 31 funds in 2018, 31 funds in 2019 at 1.3 billion. So it doubled. That number doubled again with more funds, almost doubled in number of funds and doubled in size. So in 2021, there was $2.6 billion that were raised in 2021. And in just the first half of 2022, there's already been $2 billion raised by VCs in Latin America. So there is a ton of capital in the region. In addition, there was a lot more capital that came in from outside of Latin America. So I think what we were seeing was, if you took a microscope and put it directly in Latin America versus the rest of the globe, you're seeing basically, yes, some companies were getting like overvalued across, different industries. In LatAm, there was just a lot more money chasing a lot fewer deals. So a lot of these companies are going to have to grow into their valuation, like we've seen across, other regions. So I don't see a lot of exits in the next year and a half, or IPOs happening in LatAm in the $1 billion plus range, just because companies are, cash is, king right now, and there's the interest rates are super high for debt. So I don't see a lot of companies shelling out billions of dollars for startups in this particular time. But I do think that will come back and come roaring back, come 2023, 2024, when the IPO markets come back. And when you mentioned Brazil versus Mexico, a lot of these companies are actually going public on the US stock exchanges.
Based on that previous answer, obviously there's many LPs that are seeking to put dollars into Latin American focused funds. But what would you say to individual LPs who are nervous about sociopolitical risk in Latin America negatively affecting their investment in your fund?
Yeah, so I mean, you talk to any of the families that have built businesses inside the region, they'll tell you that as long as they were growing up, as long as they could remember, as they were growing up, they would hear their father or their mother tell them that this is the worst time in Latin American history from a political standpoint. So I don't think now is really much of any much different than it was, 10 years ago or 5 years ago or 20 years ago. I mean, basically you wait a couple of years and typically the presidents end up changing and switching and everything switches. And then, you have another set of problems and challenges. That so I to kind of be brief, the sociopolitical challenge has always been a challenge in Latin America that everybody's fighting with. I think the two things to be confident in as an LP is, if you're going to be investing in a fund that is investing in Latin America, make sure they understand and know the right people. They know how to do business in the region. They have boots on the ground, because I think there's a lot of times where people are, investing in companies, or whether it's in Mexico, Brazil, Colombia. I mean, and these are all completely different governments, where you really need to understand how to navigate the market, and that's where you will get burned, because with the risk that there is and with the challenge that there is, there's a lot of opportunity. Typically, we're not working with businesses that have big government contracts. So we try to shy away from that, where we're typically working with companies that are serving SMB customers or consumers. So I think we typically avoid some of these kind of completely drastic changes that can be made at the government level. But we're seeing some really, crazy things being proposed in all countries. And you just have to, be nimble and flexible, and the founders that we're backing, they know these markets. They grew up there. They have, built a company there already. They might have a family business that exists there. So typically you're backing founders that know how to, like, for us, like LPs are backing us and we know how to navigate the market. We're typically backing founders that know how to navigate the market as well.
Shifting gears a little bit to geographical diversity among VCs in the United States. You've worked in VC in both San Francisco and New York. Why did you choose to headquarter K50 Ventures in New York City? And how would you compare the VC scenes in San Francisco, New York, and Miami?
Yeah, I mean, it seems like New York City is the hot ticket right now, in venture capital, along with Miami. San Francisco will always have. I mean, it was that's where venture capital was really. I mean, it was born in Boston, but really, grew so much in San Francisco and in Silicon Valley, and all the big firms are really headquartered there. Except for Andreessen Horowitz, who is now headquartered in the cloud, which I think is just like a telling moment of like where the startup ecosystem is, and where it isn't. I think there's, with the pandemic and with COVID, there was this, like, almost this explosion of the traditional, you have to be in the office, you have to go down to Silicon Valley, and pitch all of the VCs, and you saw a lot of the movement, even in Silicon Valley. You saw a lot of VCs moving to San Francisco, moving to the hub, to the city. This is where founders wanted to be. With COVID, you saw, all the founders go everywhere. So a lot of like what we're doing in terms of meeting founders, we're doing it over the internet, and then we have hubs where we are meeting. So we have an office here in New York City, but I'm often going to San Francisco, Miami, in addition to Mexico City, Sao Paulo, Bogota, and you're going to the different hubs where founders are, living in the cities and really building their companies. As far as the different scenes that we're seeing, I think San Francisco, Silicon Valley, it's typically a bit more insulated. I'd say there's very specific, groups of people that they work together. I think New York is a little bit, it's funny because New York City is a very much of like a sharp elbow, like zero sum game type of mentality. I think that travels over to Silicon Valley more probably now, and New York has taken this more collaborative approach, and you definitely see that in Latin America. Like, if Silicon Valley is the complete antithesis of like, if I'm doing this deal, then you're not, then my counterparts are not investing in this company. And this typically happens at the Series A plus stage. The Latin America, I think, is much more collaborative. It seems to me like New York City is becoming more collaborative in that way as well. And honestly, there's just like pretty much every single San Francisco Silicon Valley firm that I would go and visit in Silicon Valley, they have an office either here or in Miami, here in New York City or in Miami. So I think the gravitational pull is going away from Silicon Valley, San Francisco, and starting to spread to the startup hubs, so that as VCs, we're meeting founders where they are. And I think that's the typical that's the trend. Meet the founders where they are. Don't make them come to you. Whether that's on the internet or being in a hub that they're either visiting or building their company in.
You mentioned on another podcast that investors like A16Z and SoftBank are investing in Latin America with these gigantic multi-billion-dollar funds. With big players entering the Latin America VC space, how does K50 Ventures maintain its advantage in both the competition for LP dollars and competitive rounds?
Yeah, I mentioned this before. I mean, it's all about trust. We were in the region before it was hot. We built genuine relationships. I mean, this is really, as a firm and then as partners, this has led us to being, referred to great founders by our community. This sense of community is a big deal. I think a lot of funds will end up gathering this over time. The other thing is we're not really competing with these guys at all. We're so early. We're at the seed stage. We might run into a competitive term sheet from one of these bigger funds, but typically we're speaking to these founders before they're ready to speak to the bigger funds. And again, that comes from trust. That comes from like a friendly relationship, which is more like, hey, here's what I'm doing. What do you think about my approach to fundraising? Which is great. And I think that's like our whole MO is really be first check and partner to help them get this thing off the ground. And we're not a tourist fund, so like we have boots on the ground, including my partner Daniel Vasquez, who's one of the most, I mean, if not the most, one of the most active investors in Colombia, through his family office. And we've been there, we've invested in plenty of companies. And I think we bring something very similar to some of these big Silicon Valley funds that are coming to Latin America, which is experience investing in companies in the US and in Silicon Valley, New York, etc. And bringing that type of experience to the table at a very, very early stage, which a lot of founders are not getting the time of day at this very early stage. Maybe they'll get a meeting, but they're not spending quality time with some of these bigger funds at that early stage. I will say though, as a shout out to Andreessen Horowitz and Gabriel Vasquez, who's leading the efforts for the team in LatAm. I mean, he completely, I think, shifted the model on its head of like big fund. And he's meeting with founders super early. He's digging in and really getting dirty with the founders and learning more about what they're building at a very early stage, and even created a program to be investing as early as pre-seed. So I will say Andreessen has been super impressive in how they've approached the region, and I think it's really well respected amongst the founders. And Gabriel and I'm hoping they'll bring in more teammates as well. They've just done a really incredible job. So I will say that they're doing a great job. Big multi-billion-dollar fund to be able to play at the earliest stages like they have been is impressive and commendable.
I love it. Finally, I have to ask Peter Thiel's famous contrarian question, but with a uniquely Semilla.VC twist. What important truth about Latin America do very few people agree with you on?
I think there's a few people that would agree with me in Latin America, but I think in general, there's a lot of funds that came in and invested in a couple of companies within Latin America, and are now, with the market being the way that it is, they're now starting to pull out and really focus on their core, mainly because they are scared of sociopolitical risk or whatever the reason is that they make up. They're scared to invest in Latin America right now. They don't know what's going to happen. I personally think if 2016 was a great time to invest, as the run up really happened with 2020 and 2021, with the amount of venture that's being raised in the region, with where we're at from a perspective of like setting the rails specifically across digital payments, logistics. I think we're at this really interesting point, similar to a China in 2013, where now is really the time to double down, if not triple down, on in Latin America. The founders are smarter. They've done their thing. The talent has been trained in how to be an engineer, or how to be in growth, or in UX in a startup, and they've done it before. And the big companies are starting to collaborate with the smaller companies now. And these much bigger companies, these much bigger startups, and the IPO markets will come back. The much bigger startups will have cash to do exits. I just think it's now is the time to really invest heavily in the region.
What a great answer, Ryan. Thank you so much for coming on the Semilla.VC podcast today.
Thank you. Appreciate it. Thanks for having me.
Thank you for watching this episode of Semilla.VC. My name is Trip Gorman. Don't forget to like and subscribe wherever you view the podcast. And don't forget to check out our newsletter, Dealflow LA, which can be found by going to dealflow.la.